Last week, I spoke about the odds for a positive November and the implication for December based on how November ends in my weekly video. Now, if you need a refresher on what I said, go watch this video. I will place a link in the description below and also near the end of this video. So far this month of November is positive after 3 consecutive negative months. Also, in my last week video, I spoke about the 2 down week losing streak and what to expect afterward. In the last 10 years, there were 32 times the S&P 500 went down for 2 consecutive weeks, including the most recent one. 11 of them followed by 3 or more week winning streak, and that's approximately 35% of the time. And 8 of them followed by a 2-week winning streak, and that's approximately 25% of the time. So this implies there is a slight favor on seeing another up week in the coming week. Now let's see if the sentiment and the market internal agree with the odds of another up week. Last week, we saw the VIX hover around the 15 level, and it ended on Friday at 14.17. This shows the market participants are complacent, and the put-call ratio remained inside of this hedge zone between 1 and 0.75. It finished at 0.93. So although the market participants are complacent, they are not totally risk-on. They remain cautious. The up-down volume ratio for the New York Stock Exchange was mostly negative last week. Other than on Friday, we saw a 2.3 to 1 in favor of the up volume. The first 4 days of the week were in favor of the down volume. Same with the daily advanced decline. Only Friday we saw more advancing stock than declining stock. The first 4 days of the week, there were more declining stock than advancing stock. If the rally is to continue this coming week, these internals need to be more positive. And the new high, new low in the New York Stock Exchange was negative for most part of last week, including Friday. There were 106 new 52-week lows versus 44 new 52-week high on Friday. The New York Stock Exchange cumulative AD line is showing a negative divergence here, and this is not a sign of strength in the market. For the NASDAQ, the up-down volume ratio was not that impressive for a 2.25% rally on Friday. It was only 2.3 to 1 in favor of the up volume, and 3 out of the last 5 days, there were more down volume than up volume. The daily advanced decline was also dismal. On a 2.25% rally, only 933 more advancing stock than declining stock, not a sign of broad market rally. This tells us the NASDAQ rally was primarily being pushed by the few mega-cap FAANG stocks. Looking at the new high versus new low on the NASDAQ, there were more new 52-week low on Friday than on any other day of the week. There were 350 stock make new 52-week low versus only 63 stock make new 52-week high. And the margin between the new high and new low is getting more negative, meaning more stock are making new low while less stock are making new high. That's another sign of weakness. And the NASDAQ cumulative AD line continued to be in a negative divergence with the NASDAQ 100 index. This is another sign that the index is being held up by a few mega cap stock. Now let's take a look at the 11th sector in the S&P 500. We see the technology is outperforming the S&P 500, and the healthcare is underperformed, and so is the consumer discretionary. And the financial seems to be stabilizing right now. It was underperformed for quite a while, and the communication is outperforming the S&P 500. The industrial is underperformed. The consumer stable has also been underperformed here for a while, and the energy is also underperformed. And the real estate underperformed the S&P 500, material underperformed, and the utility underperformed. And looking at other sector, notice the semiconductor is outperforming the S&P 500, and the oil seems to be a little bit underperformance recently, although it's been outperformed the S&P 500 for a couple months, and now it's kind of turned south a little bit, so it's a little bit underperformed. And so is the exploration, the energy exploration and processing, and that is also underperformed recently. And the retail been underperforming, and the biotech has underperformed, and the mining sector is also a little bit of an underperform. And here we're looking at the bank. It's kind of flat, and so is the regional banks. But the home builder is turning a little bit underperforming right now, and also the long-term bonds been underperformed. And the yield curve for the 10 versus 2 years still inverted. It went more negative last week. And the 10-year versus 3-month is at minus 0.76, went more negative for the week. And the yield curve is still telling us a recession is coming if it's not already in one. The 10-year yield is at 4.6%. The recent peak is 4.996. We'll likely see it move upward, and I'm expecting to see a peak at somewhere around this 5.3 and 5.5. The US dollar came back up to above the 105 area, 105, 106, but still expecting the dollar to move higher and possibly come up to this 108 area once it breaks this 106. And here's the dollar future. As you can see, the dollar future is hovering around this 105, 106. And the next level of target is possibly somewhere around this 107 area here. And if it dips back below 105, then we'll probably see it maybe move toward this 104, this composite point of control before we see another bounce. Now we said oil, if it could not hold this 82 level, we expect it to come back down and possibly test this 74.50 area. And that's basically what we saw last week before it got a little bounce. And I'm still looking for oil to come back up to this composite point of control and get back into the 90s. Silver came down to this 22 area, and right now it looked like it might be heading back down to test this 21.55 before we could see a little bit more of a bounce. And gold came back down to this 1940 area. We see if it get a bounce off of this area. If not, we'd be looking for support somewhere near this 1916 area. We're still looking for gold to eventually come back up above this 2000 level and possibly even take out the all-time high. Looking at the S&P 500 on the daily chart here. Last week we saw the S&P 500 came up to this trend line and closed near the upper range of the weekly expected move. And for this week, the upper range is expected to be somewhere between 44.80 and 44.72.30. And the lower range is between 43.58.20 and 43.35. We saw some poor structure on Friday's price action, and we'll likely see some pullback down to this lower range and possibly below the 43.25 to fill the recent gap here. If we break above this trend line, we could make an attempt to come up and tag the upper range, and that would require some improvement on the internal. Otherwise, this upward move will be very suspicious. And the NASDAQ broke out from this trend line here, and also this descending channel. If the mega cap FAANG stock continue to get pumped, then look for the gap near this 15,000 area, this 15,600 to get filled. Otherwise, if the price dip back below this 15,000 level, then look for the recent gap to get filled, these gap down here to get filled. The Russell 2000, after bouncing off the lower edge of this balance area, we see it come back down last week and resume its downward move. And most likely we'll see it come back down and retest this 1640. And if it break out of this or break down from this balance area and a major move that we have put in, project that it could come down to this 1300 area. And the Dow Jones Transportation is still struggling to try to get back above the 14,500. We're likely to see it move back down to the 13,500 area if it can't get above the 14,600. Now the Dow Jones Industrial broke this trend line and moving up toward the 34,400 area. And the majority of the move was on Friday, and that was due to Microsoft. So we'll see if Microsoft can continue to push this index up. If not, then we'll be looking for a move back down toward the 32,500 area down at this level. And the New York Stock Exchange Composite pulled back last week to near the 15,200 area before Friday's rally that helped push it up and recoup some of the losses. We're still looking for a move back down to the 15,000 area and fill this gap. So some might be looking for a potential inverted head and shoulder here. This right here, this inverted head and shoulder. So we'll see. Now let me show you the poor structure on the S&P 500 from Friday's price action using the E-mini S&P 500 future, the ES. And here's the market profile chart for the ES. And as you can see, that we are looking at a very thin structure, elongated profile from Friday. And there are a lot of these single print area here. There's multiple single print. So it kind of tells us that there's a lot of emotional buying, and most of these basically are short covering. So we'll be expecting in the coming days the price to come down and repair some of these, if not all of these single print. So we saw the ES move away from this balance area. And if it come back into this balance area, then we'd be looking for it to retrace back down to this 43.50. And if it break this balance area, then we'd be looking for it to come down below this 4,300 and possibly get into the lower balance area here between 42.80 and 42.40. Now, if it could move away from this balance area, then we'd be looking at the possibility of coming up to these single print and possibly even get up to this 44.80 level. And here's a volume profile for the ES highlighting various balance area. Again, it showed that the 43.50 is the key level to hold, and the next upper balance area is the 44.80 right up here. Let's take a look at the ETF for the indexes, starting with the Diamond, the ETF for the Dow Jones Industrial. The Diamond came up near the value area high of this composite volume profile. The upper range for this coming week is between 347.1 and 347.5, and the lower range is between 339 and 337.5. We need to see would it be able to break above this 343 level, essentially break above this trend line. And if it does, then we'd be looking for a move toward the upper range. But if it stay underneath this trend line and below this 343, then look for a move to come down to the lower range and possibly come back down and fill this gap here near the 332 level. The SPY closed just inside of the upper range of last week's expected move and also tagged the upper trend line here. And for this week, the upper range is between 447.70 and 446.30, and the lower range is between 434.90 and 433. Now, if it could break above this trend line, then we'd be looking for a move to the upper edge of this balance area, and that is also near the upper range. So it's going to be between 445 and the upper range 446 and 447 area. Now, if it dips below the lower range, then we could be looking for the SPY to come down and fill this gap somewhere near this 430 and also possibly tag this lower edge of this balance area near 425. We saw the QQQ broke out of the balance area on Friday and closed above the upper range. And for the coming week, the upper range is between 386.70 and 385.10, and the lower range is between 371.70 and 369.50. If it could stay above this trend line and also above this balance area, then we could be looking for a move toward this upper range here. Now, if it come back into this balance area, that's a possibility that there is a look above and fail type of strategy in play. Then if it dip below this 376 and come down to this lower range, then we'd be looking for the possibility of the price move back down and try to fill some of these gap here, and eventually come back down to this area at the lower edge, somewhere around 352. And for the IWM, it closed below the lower range of the expected move on Friday. And the upper range for this week is between 173.80 and 172.80, and the lower range is 165.40 and 164.40. The IWM continues to look weak and expect the price to move toward the lower range and fill this gap here and possibly come back down and retest this lower range of the balance area, the lower edge of this balance area. So final note, will we see another up week for the S&P 500? Or will the S&P 500 comes down and repair the poor structure from last Friday? Will the market participant get more bullish, or they will get spooked by the macro or geopolitical event, and we'll see the VIX go back up above 20 and the put call ratio get back above the 1. Now, just a reminder, we're going to get the latest CPI reading on Tuesday before the market open and the PPI and retail sale on Wednesday before the market open. These economic reports will very likely move the market one way or the other, so watch the internal. They will tell us how the market feels about these reports. Best way for you to know soon after I have uploaded my latest video is by subscribing to this channel and turn on the notification. Otherwise, you might miss it because YouTube algorithm is skewed toward the bigger channel on its search page and homepage. And to help promote this channel, smash the thumbs up to give it a like, post your comment on what you'd like to see more or less from this channel, and be sure to visit my Substack newsletter. Thank you for watching and good luck.